EAA tax tutorial series. EAA have been providing trainings for almost 4 years now to small and medium enterprises and large corporations in the Philippines. Today, we will be discussing fringe benefits. A matter of interest to everyone is why benefits given to employees are being taxed when they are supposed to be just benefits. The fringe benefit is a final tax on the grossed up monetary value of the fringe benefit granted by an employer to an employee who holds a managerial or supervisory position. This is a tax which is effective regardless of whether the employer is an individual, a professional partnership, or a corporation, and also regardless of whether the corporation is taxable or not. The fringe benefits tax regulations cover only those fringe benefits given or furnished to managerial or supervisory employees. The regulations do not cover those benefits which are part of compensation income because these are subject to withholding tax on compensation in accordance with RR number 2-98 as those fringe benefits granted to rank and file employees. The fringe benefit is imposed on the grossed up monetary value of the benefits at the following rate. Starting the year January 1, year 2000, we are now using the rate of 32%. Therefore, your FBT would be equivalent to the grossed up monetary value multiplied by 32%. Now, the amount that you get here is the amount that is payable to the Bureau of Internal Revenue. Is determined by dividing the monetary value of the fringe benefit by 68%. Now, let's put that into an equation. You have grossed up monetary value is equal to the monetary value. MV would be monetary value divided by 68%. Now you would be asking, how did they get 68%? Remember that our FBT rate is 32% and we always would want to gross it up. So we gross it up to 100%. Therefore, 100 minus 32%, that's why you get 68%. Now, how is the monetary value of a fringe benefit computed? In general, the computation of the fringe benefit tax is done by letter A, evaluating the benefit granted, and B, determining the proportion or percentage of the benefit which is subject to fringe benefits tax. Now, the valuation of fringe benefits is as follows. If the fringe benefit is granted in money, then the value of the amount granted is your monetary value. Now, if the fringe benefit is granted in property and ownership is transferred to the employee, then the value of the fringe benefit is the fair market value of the property. Now, if the fringe benefit is granted or furnished by the employer in property, but ownership is now not transferred to the employee, the value of the fringe benefit is equal to the depreciation value of the property. Now, having said that, what are fringe benefits that are subject to fringe benefits tax? Now, let's define first what a fringe benefit is. Fringe benefits simply mean any good, service, or other benefit furnished or granted by an employer in cash or in kind to an individual, managerial, or supervisory employee. Now, fringe benefits are granted in addition to basic salary. Now, examples of your fringe benefits are the following. Number 1, you have housing. Yes, that's right. Housing granted by the employer for the employee is a fringe benefit, subject to fringe benefits tax. That number 2, you have expense accounts. Now, what are some expense accounts that we would normally be given? Remember when you're given a job offer and they say, okay, your taxable income is this much, but you have an allowance of this much. That's what we're talking about when we talk about expense accounts. You have meal allowances, you have transportation allowances, and you have representation allowances, which are subject to fringe benefits taxes. Now, third of that is your vehicles. Now, vehicle of any kind. Fourth would be household expenses. Household expenses such as those that are given to maids, drivers, and others when they are shouldered by the employer for the employee. Fifth would be interest forgone. Say, you give your employees cash advances and you don't give them an interest equivalent to the cash advance. That is what you would normally say interest forgone loans. Now, the interest should be at the market rate. What's market rate? Market rate for this purpose is 12%. MR for market rate. Sixth would be membership fees. These are membership fees in social or athletic clubs which are given by the employer for the employee for the exclusive use of the employee and not the company as a whole or other similar organizations. The seventh would be expenses for foreign travel. Of course, if the foreign travel is for a business, you just need to provide the documentation for that, and that won't be subject to fringe benefits taxes. Now, eighth would be holiday expenses. Holiday and vacation expenses, which are paid for by the employer for the employee, are subject to fringe benefits taxes. The next would be educational assistance to the employee or his dependents. Now, of course, there is an exception to this for educational assistance that is given after the employee has gone through a competitive measurement process, then that is not subject to fringe benefits tax, such as when they would take an exam first or they have to complete a certain number of tenure. Of course, lastly, you have life or health insurance and other non-life insurance premiums in excess of what the law allows. Now, what does the law allow? At the back of your income tax returns, individual income tax returns, there is a deduction for health insurance in the amount of 2,400 when you are not earning as a family in excess of 250,000. Okay, now let's go to an example. Let me just erase this. Let's try to compute the fringe benefits tax due of a person receiving a monetary fringe benefit in the amount of 10,000 pesos. Let's say here, the first thing that we have to compute for is the grossed up monetary value. So we have to take into consideration the monetary value, which is 10,000 pesos. And we said we have to divide it to gross it up by 100 minus the rate of 32%, which is 68%. Now you get the grossed up monetary value, and that would be 14,705.88. Now the grossed up monetary value is the one that you multiply with the tax rate. And what is our tax rate? Our tax rate is 32%. There you get your FBT due. And that would be 4,705.88. I hope you got that. It's pretty simple. Now the next problem of an accountant is how to journalize this transaction. Now let's try to journalize that. Now take note that the total grossed up monetary value of your fringe benefit is the total amount also deductible from your income. So our entry for that would be to the account Fringe Benefits. Or if you'd like to put Fringe Benefits as a subsidiary of your employee benefits, you may have employee benefits / Fringe Benefits in the amount of 14,705.88. And of course, the amount payable or the amount that you paid to the employee, which is 10,000. You credit cash and bank for that. And of course, your FBT tax payable in the amount of 4,000. You credit that also in the amount of 4,705.88. And that's how you journalize the transaction. Now that's it for Fringe Benefits Tax. If you want to be updated on our latest video tutorials and schedule of trainings and seminars, please subscribe to our newsletter. Thank you and see you in our next video tutorial.